Greetings, my dear student. This is Balakrishna again from BALAS Accountancy Special Classes. Welcome to my 35th episode. Well, from now onwards, those students of CA Foundation course as well can join and watch my episodes. I'll be working out in the days ahead, especially for the students of CA Foundation, certain advanced sums, even in respect of the chapters already covered. From episode number BSc 029 onwards, have been focusing on final accounts, that is financial statements. Well, I have a request. For the purpose of covering this final account chapter, kindly ensure that you have watched my episodes final account segment beginning from BSc 029, okay, onwards in a systematic way, so that each episode will be more and more effective. As already informed in my previous 4 episodes, I have scheduled a special 12 number of final account sums to each in every episode, beginning from episode number BSc 031. BSc 031, okay? The current one, BSc 035, is also having 2 practical sums worked out. Incidentally, those of you who watch my channel in your mobile phone, please use an earphone or headset so that the sharing section of my videos also will be sufficiently audible to you. As already informed you, I've been using only a simple technology, at least for the time being, to put across the content. Well, I have a plan to use better infrastructure extra in the year 2023 so that the quality of the video will be better. I'm sure by this time you have mastered that of finalizing accounts that is sufficiently thorough in preparing a tallied balance sheet. Although this chapter is based on a proprietorship balance sheet, the fundamental principle in preparing the final accounts is one and the same, even for company balance sheet, etc. Therefore, this basic knowledge should help you a lot for your future advanced studies also. Well, in this episode also, I'll be working on 2 practical sums of final accounts for you. The more sums you practice, the better. As usual, let me switch over to my sharing section. Thank you. Well, students, first question of the day, question number 37, 22.112, D.K. Goyal, edition year 2019. We are to finalize the accounts on 31st March 2017. You will observe that we have been given only a list of ledger balances, not a tally trial balance, followed by 1, 2, 3, 4, 5, 6, 7, 8 adjustments. And these 2 we can consider as an adjustment. So practically 9 adjustments are there. Well, I am posing this question as usual. Those of you need to write it down, please do so. This part. Balance. Okay. And the remaining one. We have been given the answer hints also. As usual, my responsibility to explain to each and every entry and arrive at this answer meticulously. Okay. So, since we have not been given a proper trial balance, as usual, let me prepare a tally trial balance for you. And this is the tally trial balance. The thumb rule is all expenses and assets in the debit side and all incomes and liabilities in the credit side. Okay. If we prepare a trial balance, we'll be very comfortable, because a tally trial balance has to essentially lead to a tally balance sheet. Well, the next thing is, this is of course for teaching purpose. I am allocating the item. Blue violet one trading account, red one profit and loss account, and the remaining black one balance sheet. Okay. I presume you have watched my pertained videos so far. Last 5-6 videos you have watched. Okay. Then you will be very comfortable because I adapted the same method everywhere. Kindly watch, because accounts, that is like that. The more you practice, the better. Okay. So this is a tally trial balance which has been allocated also, right? So let me now explain to you the adjustment entries. That's a bigger thing, is it not? Yes. Well, before moving to that one, those of you who have joined only in this video, let me explain. Trading account means of the goods sold is compared with the sales value. So opening stock and purchase expenses will come in the debit side, and sales and closing stock will come in the credit side. Okay. Having prepared a trading account, the remaining items in the trial balance will consist of all kinds of accounts, that is personal account, real account, and nominal accounts. We'll pick up each and every nominal accounts and place in the profit and loss account. Debit one in the debit side, credit one in the credit side. So nominal accounts are represented here by these red colored items. Okay, fine. And of course, the remaining one will be only personal accounts and real accounts that will move to the balance sheet. So kindly watch my previous videos also, so that you will be very thorough. Now let me explain to you the adjustment entries, the without things. First one, closing stock. Several times I explained, showing the credit side of trading account and as an asset in the balance sheet. It's a current asset. Number 2, further bad debts, written off rupees 2,000 and create a provision of 5% on sundry debtors. So let me tell you, in the balance sheet you will show sundry debtors 58,000, the given figure in the question, less further bad debts 2,000, so 56,000. On this, we need to further reduce the provision 2,800, and in the balance sheet you will show it like this only. As far as the profit and loss account is concerned, the debit side will show bad debts 4,000, add further bad debts 2,000, 6,000, add provision for bad debts. Why only 156,000? Because after writing off the further bad debts, we get the good strong debtors. There, on them only rather, we will provide. Okay. So that comes 5% of 56,000, 2,800. And this 8,800 will be the amount we will be showing in the outer column of the profit and loss account. Okay. First addition will be bad debts, followed by the provision for bad debts. Provision has to be created on good debtors. That means after removing the further bad debts, never consider the bad debts in the trial balance, because that has already been accounted against debtors. Okay, because the entry passed at that time was bad debts to sundry debtors. After that one only, we got this sundry debtors 58,000. Okay, fine. Next one. Rent has been paid up to 31st May 2017. So March and only we are finalizing. Naturally, April, May, 2 months extra. So 14 months, 12 plus 2. Overall rent we paid is 28,000. 28,000 divided by 14 per month rent into 2, 4,000. Okay, 2,000 into 2, 4,000. So how will you treat it? This 4,000 you reduce from the rent and show the 24,000 as your expenditure pertain to the current year. Okay. And as far as the balance sheet is concerned, show it as an asset. It's a prepaid rent, current asset, prepaid rent 4,000, okay, and it will be marshaled as current asset. Next one, manufacturing wages include rupees 10,000 of a new machinery purchased on 1st October 2016. Machinery has no place in a wages account. It has been, by mistake, it has been clubbed with wages. So a case of pure rectification. So remove that machinery part, 10,000. So in the trading account, we'll show the net figure as 30,000. And as far as the balance sheet is concerned, the rectified value of the machinery will be 3,90,000. Okay. Well, next. Depreciate plant and machinery by 10% per annum and fixtures and fittings by 20% per annum. Well, as far as plant and machinery is concerned, first one sustained throughout the year, 10% of 3,80,000, that is 38,000. And be careful, next one sustained only for 6 months. Why? We purchased 1st October 2016. That means October to March, 6 months. So 10,000 into 10 by 100 into 6 months, 6 by 12. That comes 500 rupees. So total depreciation as far as plant and machinery is concerned, 38,500. And fixtures and fittings, 20%. 20% of 12,000 is the asset. So 2,400. So total depreciation should come 40,900. The balance sheet against the respective asset, respective depreciation. Net figure is shown. That's all. 6. Commission earned but not received rupees 1,000. Okay. I have received only 6,000 because that is the amount shown in the trial balance. Again, they say, no, that is not the full commission you are entitled. You have worked for another 1,000 rupees also. That is called accrued. So 1,000 more. So show the full 7,000. However, this 1,000, since I have not received, somebody owes me, is an asset to me. So it is called accrued commission. So in the balance sheet asset side, it's a current asset. Okay. Next, 7. Interest on loan for the last 2 months is not paid. 12% per annum interest. 2 months. So 20,000 is the loan amount. You will find it in the trial balance. So 20,000 into 12% into 2 months. So 400 is the outstanding interest. Okay. So given figure is interest and discount. It is clubbed together. They are showing it under one account head. Interest and discount. Anyway, 4,400 rupees. And we find that 400 is still to be paid by us towards interest. Add it. And this 4,800 will be the bound expenditure for the current year. And since I am liable to somebody, show it in the balance sheet under liability. It's an outstanding expenses, current liability, the outstanding part of 400 rupees. Okay. And next one. 8. Goods worth rupees 4,000 were distributed as free samples. Several times in my past videos, it has been mentioned that any diversion of the purchased goods for purpose other than selling activity means we will reduce from the purchase account. So because it has not been subject to sale, then only we'll get the proper cost of the goods sold. An item that has not been considered for sale, if we consider, we will not get the proper cost of the goods sold. So reduce this 4,000 from the trading account and show it as an expense in the advertisement expenses 4,000. Okay. Instead of cash, we have used the goods for advertising purpose. So advertisement expenses 4,000. Okay, that's all. And the trial balance, there is an item. Insurance, including premium of rupees 1,000 per annum, paid up to 39/2017. So annual premium is 1,000. 6 months prepaid premium. Why it is 6 months? Because April to September is 6 months. Okay. So insurance pay is 2,600. You will find in the trial balance. Out of that, 500 pertains to next year. So that I am reducing, and this is the proper expenditure or the pertained expenditure for the current year that I will show in the profit and loss account. Since I have incurred an expenditure or a prepaid expenditure in the current year, means that's an asset for me. It will be shown in the asset side of the balance sheet as prepaid insurance, and that's a current assets. Okay. Well, you may find that I'm explaining it a little fast because most of the things I explained in my past videos, and I expect you people to watch those videos also. Okay. Then only you will be very comfortable in the subsequent videos and this video also. Okay, so that's all about the explanation as far as the adjustment entries are concerned. Now let us move to the final account section, trading account section. Open stock, given figure as it is, purchase, subject to adjustment, manufacturing wages also subject to adjustment. I have explained all these items just now. Sales, net of return, closing stock, given figure. So balance this account, we will get 1,24,000 as our gross profit. Okay, let us check it right now. Is it correct? Yes, it is correct. Now let us proceed with the profit and loss account. I brought forward my gross profit. Commission received, subject adjustment, which explained just now, it is 7,000. Rent, subject adjustment. Salaries and wages, as it is. Insurance premium, subject to prepaid insurance. Repairs and renewals, as it is. Insurance and discount, I explained adjustment. Bad debts and provision, I explained. Advertisement expenses, as it is. Depreciation also explained. Okay. So once this adjustment is and these are explained, very easy for you to pick up. So total the heavier side, that's income side, put it here. The difference is 20,800. Since the income side is more, obviously it is net profit. I'm transferring to capital. This also, let us check. Yes, 20,800. Now let us move to balance sheet. Bank overdraft, given figure as it is, sundry creditors also same. Outstanding salaries and wages. You will see that they are not given us any such outstanding as an adjustment. However, in the trial balance, we will find that outstanding salaries and wages 2,000. It is given in the trial balance. An item given in the trial balance as an outstanding expense means it has already been accounted. So any item from the trial balance will move only to one place. They have already accounted as salary and wages debted to outstanding wages. Hence, this outstanding wages has surfaced. It is only a liability now. So that is taken it in the liability side. Right. 12% loan, subject to adjustment, 20,000 of the loan, and interest outstanding 400. I already explained to you the interest outstanding. No, 400 rupees interest is there. We have just seen here. Okay. Or this has to be clubbed with the concerned loan account. Okay. So 20,000, and this outstanding liability to its interest is also added with the loan. So total loan now is 20,400. Then capital given figure is this much. I'm adding my net profit, and my drawings given figure is this one, and this is the latest capital. Cash in bank as it is, bill receivable as it is, sundry debtors sufficiently explained here now. Just now I explained to you how the sundry debtors has to be shown in the balance sheet. Right. This only I have done there. Okay. Net figure is 53,200. Okay. Prepaid insurance part, only the prepaid part. Prepaid rent part. These two have been explained already. Commission accrued, it is also explained. So these two are two expenditures prepaid. This is an income accrued. Both are assets. Okay, right. Closing stock 80,000. We have already seen it again come here. Okay. And these fixed assets subject to depreciation net figures. Both the sides tally. That also we are verifying. Okay. So if you do everything in a systematic way, very easy it is, right? So that's all about this first question. Now let us move to the second and last question of the day. Thank you. Well, students, our next question is question number 42, page number 22.116, DK Goyal, edition year 2019. As usual, I am posing this question sufficiently to enable those of you who could not manage the textbook or in otherwise that question is not available at your end. So please take it down. Apparently, we have not been given a tally trial balance. Only a list of ledger balances have been given. However, it is followed by 1, 2, 3, 4, 5, 6 number of adjustments and answer hints to have been given, right? So as usual, I'm preparing a trial balance so that our work ahead will be very smooth. So let me prepare a trial balance first. This is the trial balance. And what is the thumb rule in preparing a trial balance? All assets and expenses in the debit side and all liabilities and incomes in the credit side. Okay. And as far as these retains are concerned, you know, they have given the retained debit and retained credit. We know retains will come in the opposite side. Okay. Purchase return will come opposite of purchase and sales return will come opposite of sales. Okay. Anyway, they are given us debit and credit. Since they are given here debit and credit, just reflect in the debit and credit side respectively. That's all. Okay. I hope you have satisfactorily written down the question. The question has to be readily available at your end. That is limitation of my videos. Question has to be readily available at your end. Then only I will be able to explain to you. Okay, fine. So a tally trial balance I have prepared. Now the very important thing, what is that? Adjustments. Closing stock, we are very thorough with this time. Credit side of trading account and asset side of balance sheet respectively, right? And also the adjustment says a fire occurred on 28th March 2019 in the godown and stock of the value of rupees 10,000 was destroyed. Insurance company admitted a claim of 75%. So debt from purchase account in the trading account rupees 10,000. That is the cost of the goods destroyed. And it has to be correspondingly reflected, adjusted into other sections. Profit and loss account to the extent of net loss, that is 2,500. We got 25% we lost. 75% our insurance company is admitted the claim. So that will be in the balance sheet. Okay. And second, 1/3 of the commission received is in respect of work to be done next year. That means 1/3 of the commission received. Commission received has been given 6,000. 1/3 is 2,000. That is unearned commission. Why it is called unearned commission? I received the money, but I have not enjoyed the work what was being expected of me. Okay, that is pending. That's why it is called unearned. the net amount of 4,000 only I am eligible to take in the credit side of my income in the current year. Okay. And this unearned income is a liability, is it not? So I will be showing the liability side of my balance sheet under current liability. Okay. Fine. Next one. Create a provision of 5% for doubtful debts. This is the most important adjustment in this sum. Because of this adjustment only, practically I have chosen this sum. Here you will find the old provision is substantially high, 3,000, and the bad debts as given in the trial balance is how much is the 400. Okay. And also new provision, that is 5% of debt is 2,000. Together come to 400 plus 2,000, 2,400. Still the provision is more. So after successive deductions, the left out balance is still a credit that has to be shown in the credit side of profit and loss account. Keep it in mind. Old provision is substantially high that will absorb my bad debts and new provision. So the left out I have to keep as an income in the credit side of my profit and loss account. Okay, fine. And the balance sheet, that is minus the new provision as usual, right? Fourth one. 50% of printing and advertising is to be carried forward as a charge in the following year. Okay. 50%, that means 5,000 is the amount given. Just show printing and advertising in the profit and loss account, 2,500, and the deferred revenue part of it is shown in the balance sheet. So 2,500 and 2,500 each. Okay. Current year's expenditure I have to absorb only 2,500 and balance being an asset, a deferred revenue expenditure. It's a typical example of a fictitious asset to be shown in the balance sheet asset side. Okay. Fifth one, rupees 900 is due for interest on loan. Okay, we have been given a loan in the sum. Okay, we can verify whether any loan is there. Yes, 20,000 loan is there, right? So loan, just add this outstanding interest in the balance sheet, 20,900, and this is an expenditure. Interest payable, interest is an expenditure. So interest on loan you show in the debit side of profit and loss account, and the corresponding entry as a liability. And however, we can club it with the loan and show 20,900 both in the liability side. In the liability side, against the loan, in the outer column, we'll show 20,900. Okay. Next one, provide for manager's commission at 10% on net profit before charging such commission. Mind student, read carefully. Before charging such commission means a straight case. Okay, it is not rate upon 100 plus rate. It is just rate by 100. You'll, as you go on doing the sum, you'll find that the credit side minus debit side, there is a profit at the stage 60,000. Just take the 10% of that one, that is 6,000. So manager's commission 6,000. That they have agreed, or other also has agreed that one in the book. I checked it. And balance amount will be your net profit. Okay. So that much we have done. Now, the allocation part. Before proceeding to the final accounts, the allocation part, as usual, I'm showing it. All blue, violet items are trading account, and the remaining items of nominal account nature will be transferred to the profit and loss account. I am indicating it against red items. Okay. Here also. Fine. And the remaining one is our balance sheet items. Proprietors withdrawals means a synonym of drawings. Okay. You're familiar with all this. Fine. Here something, nothing. Capital, loan, creditors, that's all. So now let us move to the final section. That is a trading account, profit and loss account, and balance sheet. Well, I have explained to you each and every adjustment, the debit and credit aspect of each and every adjustment. We know that an adjustment is nothing but a journal entry. Okay. So where the debit aspect of the same as well as the credit aspect of the same has to be placed, I have explained you in a very lucid way. Also, I have allocated the trial balance giving different colors, okay, for trading account, profit and loss account, and balance sheet, each item. Having done so much, our drawing of the final account should be pretty easy now. Well, trading account, opening stock as it is in the trial balance, purchase, adjustment I already explained, less retained, okay, less purchase retained, and this is the figure. Carriage inward as it is shown in the trial balance. Sales, less retained, this is the figure. Closing stock, as an adjustment it has been given. And if you balance the trading account, we will arrive at a gross profit of 96,500 that I have brought forward in the profit and loss account section. Okay. Now, rent, no adjustment, salary, no adjustment, traveling expenses, no adjustment, insurance premium, no adjustment, telephone charges, no adjustment, printing and stationery as planned, half comes, that is this much, carriage output, no adjustment, loss by fire, already explained, to the extent of uncovered loss, that is my loss I had to suffer, that is shown here. Interest on loan, already explained. Manager's commission, if you find at this level, you will find there is a 60,000 profit on that 10%, not after charge. Plainly take on that one 6,000, and my net profit is 54,000. Let us check 96,500 and 54,000. Whether the author is agreeing with that one? Yes, 96,500 and net profit is 54,000. Now the balance sheet. Creditors as it is. Manager's commission, we know that. Yes, it is payable, is it not? Manager, we are not paid it. We made a provision here practically. So that will come here. Unnamed commission already explained, that's a liability. Loan already explained along with the interest outstanding, that is shown here. Capital given in the trial balance is 1,75,000. I am adding my net profit. I am reducing my drawings. Okay, drawings has been what were their drawings? Proprietors withdrawal. That is a synonym of drawings only, is it not? So the latest capital or the capital as on 31st March 2017 is 2,25,000. As far as the asset side is concerned, cash given straight, that is, I already explained to you. Okay, that is minus the latest provision I will show here. Insurance company, okay, they agreed to pay me 75%, that comes 7,500. It's an asset to me, I'm showing here. Closing stock, okay. Closing stock, okay, fine. Investment as it is, there is no depreciation in this sum. And so assets are shown as it is. Printing and advertising, this is the deferred revenue part of that one we are showing here, 2,500. So both the sides tally. However, I am reconfirming it. Yes, we have verified and we have confirmed it also. Okay. So students, today's quota of 2 final accounts also I have ensured. Okay, I hope I have explained to comprehensively. Well, how you are going to utilize my videos? Just watching my videos over and over is not sufficient. You have to keep the question aside, try to work out the sum yourself. In case you do not get the correct answer, then only refer to the video, okay? And still you are having doubts, means you are welcome. Keep in touch with me using my WhatsApp number, okay? It's all available in the description box, and also generously offer impartial comments about my videos, okay? So practice more and more, and also ensure that your speed is getting improved, because as you go on doing your further studies, and especially for professional qualification, etc., apart from your clarity of the subject, speed also plays a vital part. So to take care of all the speed, clarity, confidence, everything, do the same sum many times do it faster and faster and develop your confidence sufficiently. Okay? So that's all for today. Take care of yourself. See you soon. Thank you.